Hey everybody, hello, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Today, welcome, a new week, a new start, and straight away we're hit with political turmoils. We're hit with the upcoming important economic data sets, which are coming out this week from the US and the EU, not to mention the rest of the world as well. But look, there is a lot of things happening. I think we'll try to put everything into kind of in its shelves. So stick around. Hopefully you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning, everybody. Hi, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. Welcome. It's the 8th of September, 2025. Quite small apologies for the late start. I was having a few internet connection issues, but finally I managed to sort it out. But look, ladies and gentlemen, welcome. Today is Monday, and it's the second week of September. Look, the world is kind of, I wouldn't say falling apart, but there is certainly a lot of things happening, and about all these things I'll talk about in a bit. Before we jump any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations, and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yes, also I'll put my usual good morning in the chat room. Good morning, everyone. There we go. So yeah, ladies and gentlemen, I hope you had a fantastic weekend. The weekend, I hope you've managed to recharge your batteries, and I think it's time to jump into the markets. Now, also, before we jump into the markets, quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at what's happening. And of course, I'll pick up on the indices in a bit, and I'll definitely pick up on Nikkei here. But certainly, yes, the economic calendar. Let's refresh the economic calendar very quickly here. So, okay, first of all, from the political side, we have a problem in Japan. The prime minister has resigned. The new one will come in, of course, but certainly the current Japanese prime minister, or maybe already previous, has resigned, and we're going to be seeing, and the market sees that as a positive. The Japanese Nikkei 225 saw this as a nice positive here, and kind of exploded nicely, higher. So, long story short, for now, we're of course monitoring the situation, what's happening in there. We're monitoring what's happening in the in France, because again they have a political turmoil. The prime minister, the current prime minister, is going to be losing the non-confidence vote, and basically he will have to appoint a new prime minister, or I think there will be another election, so something like that. Somehow it works this way. But certainly, yes, of course, the market is not happy about this, although it seems to be everything is quiet-ish, but to be honest, in my opinion, the world is kind of slowly falling apart, Anyway, it's an interesting period that we're going through. Of course, I would say, all the generations would say the same thing, that, they're living through they're living through a period which is crazy and radical, and I think, it's our turn, and it's interesting, but at the same time, as always, it's like scary a little bit, what's going to happen next and stuff like that. But look, For now, we plow through it. Let's see how this is going to play out. For now, we can only we cannot really worry about the things too much which we cannot control. We need to keep in kind of keep in touch with reality, of course, and we need to understand what's happening around us. But sometimes it's difficult to to kind of try to change something because you understand that you're not going to change anything. So it's so yeah. Anyway, that's a little bit of philosophy here for Monday morning here. Look, ladies and gentlemen, let's have a look what's happening in the economic calendar this week. So this morning we got the trade balance from China. Now that was a nice surprise here. The forecast was on the higher side here a little bit, but yeah, it came out at 102.33, and there we go. Look, I mean that was a good surprise. I mean we saw exports rising, but not as forecasted. So, but the only thing is that the surplus kind of got offset by a very big drop in imports, and that's why we're getting this nice surplus here for the month of August. Now, in terms of Europe trade balance, European trade balance also came out. Now that one, the the German trade balance came out, and that came out at the on the lower side here, not as forecasted because the forecast was for the same as previous. But hey, came out lower. Exports declined, imports declined. So yeah, industrial production, German industrial production month on month improved. That's good. Came out in line with expectations. Now we're going further. Today is a kind of a relatively quiet day, I would say, but I think the main focus will be on France, in my opinion. Also partially on Japan, but certainly the French dilemma is the bigger one right now because there's a lot of uncertainty. We'll keep an eye on the French bonds as well because again, if the French bond yields, if those continue to rally, I mean, then yeah, it's we're seeing that the market is kind of very spooked. Jumping into some U.S. data here this Monday, consumer inflation expectations. Let's see what kind of number we're gonna get there. But at the moment, the previous number was at 3.1. Maybe if we get a higher number, then that's of course pushing the idea that there could be more inflationary pressures going further down the line. Yeah, that's kind of realistic. So yeah, in terms of Monday, that's kind of it. Now Tuesday, ladies and gentlemen. So look, we'll kick off with the NAP business confidence from Australia, and then we'll have some other smaller data sets. But what's interesting, it's on Tuesday, we're gonna get the non-farm payrolls annual revision. So basically, it's like once a year they will revise all the numbers that were done throughout the year, all the monthly numbers, and they will revise those. And this is where the craziness comes in. So basically, you're thinking that you're getting one NFP, but then after a year you're gonna get, oh, yeah, actually, you know what, it wasn't that. So what's going to be interesting in all this is that how accurate the revision will be, or how close the revised numbers will be to the ones that were reported. Because again, we know what's happening in the U.S. They have a problem within the Bureau of Labor and Statistics, because what the issue is that nobody kind of trusts the data anymore. So you get your NFPs. By the way, on Friday we got the NFP. Let me just open this one up. On Friday we got the NFP, and that one was a disaster in a way. Not because it was wrong or something. No, it's just in general the U.S. labor market is kind of suffering. So non-farm payrolls came out at 222,000 against the 75 forecasted. Now I talked about this, and I talked about this on Friday. If you watched my session, I said to you that this is a major issue right now because you have unemployment, which is around 4.3. That was the latest number, as expected. Yep, came out 4.3. The previous one was 4.2. Yes, it's growing, but let's say it's still okay-ish. But then you have NFP, which there's no jobs created. So what this is telling me that basically you have like still the ones, there are not many layoffs, let's put it this way. There are not many layoffs. The people are still working, people have jobs, but there's much fewer jobs created right now. So that's the issue, that's where the problem kind of arises. And my problem with this is, of course, is that the further we go, the more, the further we go with the progress, the less junior roles there are. Because again, nowadays I think that what people are saying and what everybody's looking at, that to get an office job, it's becoming a little bit more difficult. And that's why, because nobody needs a junior anymore. Everybody needs a specialist straight away, because the junior role can be done with AI. So yeah, that's the unfortunate situation right now. We can debate on all this. We like it or we don't like it. Somebody might say, but then you can requalify and do something with AI and stuff like that. It's like, there's like these changes happen. Nobody likes change, but again, of course, I understand that people need to kind of adapt and need to adjust to changes. But certainly, it's never the pleasant moment. Am I a supporter like of this whole situation where AI is taking out junior roles? No, not really. I understand from the government, from the company's perspective, that's more efficient. But then again, okay, it's a stick with two ends. Who you're gonna, if you're producing something, or you're producing, or like something, doesn't matter. Is it like touchable, or maybe just a service or something? You need to sell that to somebody. You need a consumer, and if the big portion of your consumers are unemployed, for example, right, or let's say struggling to find a job, nobody will buy your produce. So there's always has to be a balance. So anyway, like I said, it's a big debatable a big debatable topic, which probably needs a separate session on its own. Anyway, going back into the economic calendar, Tuesday. So yes, we're watching that non-farm payrolls annual revision, because the previous one came out very low. And I mean, right, actually, you know what, let me just open the chart for that one, for the NFP. Where's that NFP, non-farm payrolls? There we go, lunch chart. And oof, that's my breakdown here. So yeah, this is the problem that I'm seeing. Look at this. I've marked this. Oh, why is it not giving me the zero? Let me just put the zero here. Mark. Yep, there we go. So I have marked the zero line here, and basically you can see that we are very close very close to dropping like below this zero line. And in a way, that's I think that they need to understand. I think the market is worried. I think that everybody's worried, but nobody kind of gives a damn right now, because everybody's focused on like interest rates. We need to cut the interest rates. We need to, we need to spend more money on AI and stuff like that. But okay, great. You will spend more money on AI, but still. Still, you need to kind of sell that product or service to the consumer. And if the consumer is just kind of not happy and doesn't have something to eat, then yeah, it's like I said, the world is getting. That's why in the beginning of this session I said that the world is getting to this point where I think the blood in everybody is boiling to the extent, because the world became unlogical, and it became way too greedy. So it seems like as a major offset is needed, and a major kind of some sort of a restart is needed. I don't want to be, like saying things out loud in terms of what could, happen or anything like that. But I kept on saying that we do repeat scenarios of the past, and it seems like we're repeating the scenario of the 20th century. So with a few shifts here and there, of course. But anyway, coming back to the economic calendar, going into Wednesday very quickly. So, by the way, Tuesday, very big announcement by Apple, new iPhone. Yeah, so everybody's waiting. So if you are trading Apple stocks or you're investing into Apple stocks, just keep an eye on that one. Going into Wednesday, the 10th, look, the day will kick off with inflation numbers from China together with the PPI, so the CPIs and PPIs. The expectation is for the year-on-year inflation number to drop to minus 0.2%. The PPI is expected to improve. Okay, let's see how that plays out, of course. At the moment, I don't want to say anything, but certainly Chinese inflation here, the CPIs here has been kind of near zero, and look, it's kind of hugging that zero mark, and it continues to oscillate around that zero level. And this, of course, is debatable again. I mean, I would say this is not very good. Why? Because it doesn't indicate growth. We need a little bit more inflation in order to indicate growth. So yes, we're not really getting that. Yes, the surplus is great. You know, the trade balance surplus is great, but certainly, are we actually getting any good progress in the economy? Well, also the current tariff kind of issue, which, by the way, calmed down a little bit, I would say, but nevertheless still remains out there. So the tariff issue continues to be the so-called big problem until this administration, until this U.S. administration is in power. I think it's going to be coming and going, like, going to be riding the wave, because whenever there's nothing to talk much, suddenly tariffs are remembered. Anyway, so yeah, going into Wednesday, certainly, yes, we're keeping an eye on other data like the U.S. 30-year mortgage rate, which, look, so far it comes out every week, but it has been declining a little bit. It has been declining because I think that the market is expecting a rate cut, which I'll pick up in a bit. But yeah, for now we're keeping an eye on this one. Because the problem is, if it suddenly gets closer to 7%, then that's where the issue can arise. Certainly, USA then will deliver its PPI figures, both headline and core. The headline year on year, we don't have a forecast, but we can see that the month on month is expected to decline. The core year on year PPI also doesn't have a forecast, but the core PPI month on month is expected also to decline. So, but still to remain in positive territory. Now look, what can I say here? Is that it's not a bad thing, certainly, but again, a little bit of higher maybe inflation is needed, and it's in order to kind of show growth here, but maybe just a little bit of a setback to support that, to support those rate cuts that the Fed is planning to do next week. And certainly looking at this chart, yes, we had a spike here last time on the year-on-year figure, but then kind of it still remains just kind of around 3%, maybe a little bit below. But if the actual number comes out higher or the same or higher than 3.7, I think that this is where the Fed should start worrying a little bit. But I think the Fed right now is more worried about the labor market, because look, if you remember on Friday I talked about this. On Friday I said that remember that there will be a column appearing for two rate cuts, for 50 basis point cut. There we go. Look at this. This is beautiful. This is amazing. We're now pricing in a 10% probability for a 50 basis point cut. Look, Okay, it's a bit of a roller coaster ride, no doubt about it. Are we gonna see like 25, or are we gonna see 50 basis points? At the moment, let's stick to the forecast, but certainly the fact that there is now a probability, it's changing a little bit the landscape. So we're keeping an eye on the numbers of the PPI numbers, because on Thursday we're gonna get is gonna be the CPIs. So we're gonna get the CPI. Where's that CPI? Thursday. There we go. So the CPI is expected. Now let's have a look. Inflation number year on year 2.9. So basically we're expecting a little bit of an uptick. If we somehow surpass the 3% mark, I think that this is where the issue can arise, for the Fed again, because it's going to be like it's like one of these data sets when they come out like not in favor of the Fed. It's kind of constantly like poking them with a stick. So they're currently focused on the labor market, and that's why they are going to go for that rate cut in order to stimulate the economy. But at the same time, if inflation picks up, it seems like, okay, I'm not dealing with that like issue for now. Like I'm just gonna stick around for fixing this issue, and then I'll deal with with inflation. So that's how it looks right now, and certainly let's see if inflation if the headline inflation pops above 3%. If it does, then I would say this probability could disappear. The 10% probability for a 50 basis point cut. Now look, next step here, of course, next piece of economic data, what we're going to be keeping a very close eye on, and that's going to be your ECB CPI rate. Now this one is currently sitting at 2.15. The bank is not going to do anything. I don't think that they want to drop the rate below kind of 2% here. I kind of somehow doubt that, but I think that unless they do like a 15 basis point cut, then bring it back to 2%. So why not? However, I don't think that they're going to do that. I think that they're going to stay data dependent, as always. What they're going to say. We're going to stay data dependent and basically not do anything and continue monitoring the situation, because look, in terms of the Eurozone inflation, it's still okay. It's still modest. It's 2.1. Yes, it has been on a curved move back up, but excuse me. The recent low that we had in May was at 1.9, and basically from 1.9 it just grew to 2.1. So I wouldn't say it's like a major rally or something. No, it's a tendency, it's a trend, but still, the 2% target would be preferred, of course, by the ECB. But certainly we're just pushing a little bit higher, but that's still okay. Look, going into further economic data, for Thursday, there's not much. And then Friday, we get the UK GDP, the month-on-month and year-on-year numbers. So for now, yeah, that's going to be probably the main event of Friday, because on Friday, the US doesn't really deliver much apart from the Michigan consumer sentiment. But again, that's the preliminary number. So yeah, it's not something like, say, final or anything like that. No, but the UK data together with some German numbers here will be an interesting sight, in my opinion. So if you are trading something, pound or euro related, enjoy Friday. Ladies and gentlemen, let's jump into the indices now very quickly. Now Japan's Nikkei, there we go. Look at this moment here. Great move, great stuff here. I talked about this. I said that if we do pop and stay above this 42,000 kind of 500 territory, yep, I'm going to go higher. And so far so good. We reached my target here, the 43,000 kind of 935 here ish. Look, everybody's watching the 44,000. That's understandable, but it's so close that, to be honest, I think we could end up just breaking the 44,000 zone and just pushing higher. If we don't do that, if we don't, then we're seeing we could see a possible reversal. First of all, like a nice little false breakout or something like that, but then a nice reversal back up, and that's in case the index fails to overcome the current all-time high, and and shift towards that 44,000 zone. China 50, let's quickly have a look at this one. What's happening here? We're still in the box. I'm waiting for this one to make a move. So look, I talked about it. I said that while we are in this little box here, roughly between the 14,589 and the 15,051, yep, I'm just going to observe the price action. Dow Jones Industrial Average, we're also in the box. We're waiting for some sort of a good show here, a good catalyst that could drag this one out of it. Okay, look, in terms of companies, let me just double check something very quickly to see if we do get some sort of major economic data, economic events, which could like drive this one. Well, I think, in my opinion, the CPIs are the ones that that could drive it. I'm sorry, I was trying to find the earnings here, because if we do have any earnings, honestly, ladies and gentlemen, do apologize, my head maybe today is not the sharpest, but okay. No, we're done with the earnings season. So Oracle is the one that's reporting on Tuesday. Adobe and Kroger are going to be the ones that are reporting on Thursday. So a little bit of a delayed earnings report. Anyway, but if you are trading those companies, then keep an eye. Certainly, yes, like I said, we're watching this very carefully here. We need an exit. That's period. I need a clearance either through the 45,000 zone here on the downside, or through the 45,760 zone on the upside, and then we can take it from there. The S&P 500 still beautifully trading within the rising wedge pattern. I said it before and I'll say it again, such patterns tend to break to the downside, but a confirmation break is needed. So we did get one, but it wasn't really the confirmation, because normally we would need to see the body of the daily candle remaining outside this pattern. While we remain inside the pattern, it could still drift higher, but on a modest move. But if we suddenly clear the lower side of this rising wedge and we stay below it, then yes, I will go lower. Nasdaq 100. So yes, pushing higher. And another thing which I mentioned to you recently is that, actually specifically last week, is that whenever we go for a new all-time high, let's say in this case, look, the S&P went for a new all-time high on Friday, but then it failed to stay above it. To me, that's more of a bearish indication. Yes, now there's a question there: are traders ready to drag this one lower or not? So Nasdaq, I think it still has a little bit of room to reach or to fill in order to reach the current all-time high and maybe surpass it. But the Dow is very close. So in my opinion, normally all the three top U.S. indices do actually end up reaching the all-time high. So they just kind of wait for each other in a way. But that has been happening for now so far. If let's say if it's Dow that's going for an all-time high, then the S&P kind of follows, then the Nasdaq follows. If the opposite, let's say Nasdaq is hitting the all-time high, then the S&P follows. The Dow follows here as well. So we're looking at this very carefully, and I think, like I said, we're not far from the all-time high on the Nasdaq, so I think it's quite doable. Now then, let's have a look at the dollar index. Okay, we're still loving this area, honestly. Like, we are really loving this hurdle here, this 97.42. If we clear that, I'm gonna go to the downside, period. I'm gonna go to the downside, and my next target is the 96.83 or maybe the 95.97 zone. German index DAX. So we're rebounding. We're open right now. We're rebounding from the 108 EMA, but I think I'm not going to rush into things yet. So look, Let's get rid of this this line here. So for me to aim a little bit more to the upside, a push above the 23,922 is needed, because at the same time we could climb above the 50-day EMA. For the downside, a drop below the 100-day EMA is required in order to shift a little bit lower. Jumping into the FTSE 100 very quickly, ladies and gentlemen. So yes, we're still stuck here. And I said to you before, and I'll say it again, that I need also a clearance. Why did this level disappeared here? There we go. I think that this is a good area of resistance, 9,250. I think if we clear that one, this could open the door to some higher levels. But for the downside, a drop below the 9,100 zone is the one that we need. Let's jump into the Forex world very quickly. There we go. We're exiting the box. We're clearing the upper side here, the 0.6568. And my next target is the 0.6625 zone right here, marked by near the highest point of July, near the current highest point of this year. So let's see if we can create a new high for this year. AUDNZD, amazing. I love it, and I talked about it, and there we go. We're drifting towards the 1.1067. Let's see if we can test that one. AUDJPY, of course. So the news that hit the wires today was the Japanese Prime Minister has resigned. So basically that hit the Japanese yen, but the stock market did rally. But the Japanese yen, yes, took a bit of a beating. Not much, I would say, just normal standard movement here. But again, you'll see, you'll see headlines, news headlines, where they say that, the Japanese yen is taking a major hit. It's like collapsing and everything and stuff. But that's a little bit overdoing it, over exaggeration. NZD USD pushing back up. Let's see if we can clear that downside line, because it seems like the momentum is strong to the upside. NZDJPY, again, also breaking this downside line and approaching one of the key barriers near the 87.54 here. If we clear that, I will go further north. USDJPY. USDJPY is still stuck in a box, and honestly, until I get a clearance of one of the sides here of this box, then I'll do something about it. USDCAD. USDCAD is an interesting one here as well. If we clear the 200-day EMA and we push above the 1.3879, I'll go to the upside. USDCHF, beautiful move. There we go. We tested the upper side of that triangle, and then boom, we cleared the lower side of it. Now look, I don't want to say anything yet, but look, maybe this is this. Maybe this is a falling veg pattern. I don't know. Again, I'm trying to make some sort of logic here, but certainly it's a little bit difficult. So maybe this is a falling veg. If it is, then there is a chance for this one to break out back up. However, for that, I need to see a move back above this upside line right here. Let's jump into the euro. So of course we're watching the euro very carefully this week, because again, because of the ECB, and we're getting that 2.15 rate again. And if we do get that, then certainly that is a little bit of weakness for the euro, for the euro bulls in a way. And if you're, okay, some of you might say, but hey, maybe this is, this is actually a good thing, that we're not going to do anything, because we're not going to go for that cut, and that's why the euro could kind of, still strengthen. Indeed, yes, but I think it could be the issue with, or not the issue, but it could be the matter of the weaker US dollar. That's why this pair could, of course, don't get me wrong, if somehow the, Christine Lagarde comes out with some sort of nice wording for, in favor of, maybe slowing down with the cuts, then yes, we could see Euro USD nicely traveling to the upside. Quick update on Euro JPY. Nice push here above the 173 territory. So the next target is the 173.9, and we actually reached that. So it was a good area of resistance. Now let's see if we can clear that one. GBPUSD pushing back up. Similar story with with the euro. We're watching the data that's going to come out from the UK, especially on Friday, and of course we're watching what's going to happen with the US dollar. Let's jump into the commodities. Gold, there we go, flying high, ladies and gentlemen. We're hitting the 3,600 level. We're clearing that this morning, and the new all-time high for gold, 3,612. Well, where next? Where next? Look, again, my Fibonacci extension. Let's try to use that one. So this here, if we're measuring it this way, from the low of these, the lowest point of April to the highest point of April, and then to the lowest point of May, then you'll get something like this, where the next target could be the 3,664, which is around the 100% here on the Fibonacci extension. However, if we try to make it a little bit bigger to make some sort of valid points here on the upper side, then I would say I will mark it from here. I'll mark it from this drop that we saw at the end of February, and then we measure it this way, again to the highest point of April, and then to the lowest point of May. Then we'll get ourselves that the 78.6% here on the Fibonacci extension is near the 3,645. So this could be the next big target. So keep that in mind. Silver, very quickly on silver, it's dropping, or actually it did drop below the $41 mark, but then now it's trying to push back up. But hey, 41.45, that's the break that I need in order to go to the upside. Palladium, very quickly, is kind of stuck here near the EMAs, so I'm not really doing much here, to be honest. Platinum, a bit of a mess here. I think it needs to be redrawn, so I'll give it a go. I'll leave this one for market participants to sort out themselves, but certainly if we somehow break this upside line here, which is drawn from the low of the 31st of actually the lowest point of August, then I think that we could see a nice drift to the downside. Let's very quickly look at copper. A similar story, bearish flag, it seems like that, so we'll keep an eye on down. WTI oil, so we did get the OPEC plus increase and in October output by 137K, if I'm not mistaken. Normally it should be a bearish kind of piece of news, but for now the market is reacting positively. However, look, either way, I'm looking at this from the technical perspective, and what I'm liking right now is this. Let me just actually keep this one for now. Let me just see if I can grab something here. Right, there we go. So I'm wondering if, like I said, if this is not going to end up being something of a good strong area of support. If we can clear this 61.43 zone right here, then yes, I'm leaning towards the downside. Natural gas pushing higher, remains above 3, so and continues to push higher, and I think the next targets are the 100 and the 200-day EMA. Coffee still stalling, but remains above the 23.6. That's great. So it shows willingness of the bulls to still step in. Cocoa dropped below this hurdle. We are now very close to this area right here. There we go. This key support zone, the lowest point of July, near the 7,205 zone. If we can, end up testing that one, I think we could even clear it. Wheat, just a quick update, nothing major, just dropped below the 520 zone, so okay. Sugar, now this one is near this key area of support around the 15.5 zone, which was tested back in July. So if we can rebound from this area, that's wonderful. More buyers could join in. Cotton, nothing major, is just still holding to the 65.73 territory. Ladies and gentlemen, finally for dessert, the crypto world. Yes, Bitcoin is struggling with that 112 territory. It gets these false breakouts and these brief visits above it, but certainly it's not really helping here the bulls, because they would like to see at least the body of this daily candle remaining above the 112 zone, and this 50-day EMA shown here as the green line. Bitcoin Cash drifting back down after a good test of this downside line, this little short-term downside resistance line. They broke it, pushed higher, 600, surpassed the $600 mark, and now it's below it again. So let's see if we can actually see this one traveling back to the downside. Very quickly on Ethereum. Ethereum is just gradually cleared the this casually, I would even say, clear this upside line just by default, in a way, moving to the right, so there we go. So long story short, if you're looking for some downside, I think that there is a chance for a move lower here, but certainly I would prefer to wait for a drop below the 4,088 zone, somewhere here, which coincides nicely with the 50-day EMA. Ripple, what's happening in Ripple? Rebound, push back up. Let's see if we can actually form something of a descending triangle. Hey, that would be an interesting moment. So hey, let's see. Litecoin, very quickly. Litecoin pushing back up. Look, some of you probably might say this: is this a head and shoulders pattern, a potential head and shoulders pattern? I think so, yes. However, I will abandon this idea if we start pushing somewhere above this area, the 124.40 zone. If we clear this hurdle, then I would say there is a little bit something more in the back. What's happening with this crypto. Dogecoin, beautiful break here. Look at this beautiful break of this downside line, and certainly yes, at the moment we're watching this is opening the door to some higher levels, so that's what I'm going to stick to as long as we stay above this downside line. And Polkadot is coming back to the 4 level, so again, also very interesting. It's trying to make its way back up, and I really don't want to rush into things, certainly, but yeah, it's the moment where we need to wait for a clearance of one of the sides here of this triangle. And finally, Tron. Wow, what a drop. Look at this. I talked about this drop, but I didn't expect it to be like that. So there we go. The 0.3321 zone cleared it together with the 50-day EMA. We traveled lower, tested the 100-day EMA, tested this upside line taken from the low the 6th of November, and then we rebounded sharply. Wow, that's talk about a big move here. And let's measure how much we saw here. And I talked about this little hurdle here, there's 0.3321. So from here all the way to this this upside line, we did around 8%. So that's a significant result here. But now let's see if we're not going to end up traveling back above the 50-day EMA, and maybe even going back into the box here. But again, let's not rush into things for now. I would say this way: as long as we stay below the 50-day EMA, I'm leaning towards the downside. But if we somehow push and stay above it, I'm leaning a little bit more towards the higher levels. Ladies and gentlemen, that's it for this session. Thank you very much for watching and listening. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I shall see you on Wednesday, ladies and gentlemen, Wednesday, and yep, for my midweek review. We'll see what's happening there. Anyway, ladies and gentlemen, thank you very much, and I'll see you later. Bye-bye.